I went out with a group portfolio managers last night. All we wanted to figure out was how bad it really was versus how bad it was. And there's this like Abbott and Costello game coming on right after Larry speaks with Tusa. Well, did you mean negative cash flow? No, I meant negative cash flow industrial. Well, is that negative cash flow company? No, I said, well, it could be the company. And I'm like listening to it. I'm saying, are you kidding me? I mean, come on. You dropped a bomb on my head. And I don't really care that it was 50 megaton or 70 megaton, but it was really sobering. And, Tusa delivered again. You just don't want to have a chat with him. That's what you do. Don't chat with him. Unless you want to chat with him about, like, having a steak dinner. You know?
David, he did go on to say, we're no longer willing to engage in a debate where the bull case is that power is, quote, not that bad.
Jeez.
Yeah. It's interesting. I mean, Carl, you remember we had Tusa on, what was it, a day after the big rally on the Danaher deal, of course, the sale of Biopharma for more than, $21 billion, still a very small percent of revenues. It seemed to change momentum to a certain extent and even psychology, at least somewhat. Then Tusa came on with us that morning, Jim, and just said, nope, you know what, I continue to see the numbers and I continue to believe that they will be less than many people expect. And I can't get away from that in terms of his fundamental view that the multiple, whatever it may be, based on the numbers for this year and next year, simply does not justify a price that was briefly at least touching, $11 a share, again, on the very well-received deal to sell that unit to Danaher. And here we are. Do you believe the psychology has changed again, Jim, when it comes to GE?
I think it got ahead of itself. Nick Heyman was on Squawk this morning. I love Crazy Nick is what we used to call him. And he was talking about how they just have to pay down more debt. And you'll see and that they can do it. They have things to sell. But obviously, David, when you listen to Tusa, what Tusa is saying is they're selling the crown jewels to fund the bad. And that's always a bad trade. You shouldn't be doing that.
Yeah, although you really think that's the case? I mean, yes, they are selling certainly a very fast-growing part of their healthcare business. Even though as a percent of revenues, it's relatively small. It obviously has very high margins because it is not that high a multiple when it comes to, I mean, it's high, but not that high when it comes to the actual multiple on profits of that unit. But, Jim, there's plenty of other things there in healthcare that people focus on. And when you talk about jewels, you always refer really to aviation.
Right. Well, I think what the rap is not that what we've seen yet. I think that the trade to Danaher was brilliant. And Larry did great, and Danaher obviously did great. I think what they're saying, what the undertone is the next sale is going to be a bad one. It's going to hurt because they've got to raise, I don't know, the numbers that Heyman was tossing around, $30 billion. David, there is no $30 billion without selling something great.
No, although the $20+ billion was going to be and is very helpful in terms of giving them some more time. I mean, they continue, and I don't know to what extent Culp in his conversation yesterday focused on this, but overall, GE and I think its board continue to believe that they have given themselves more optionality when it comes to those things and more leeway. Yeah. And so, therefore, they don't have to make a deal, perhaps, that some would see as a bad deal simply to reduce leverage beyond what they're going to be able to from the proceeds from this sale to Danaher.
I think David's absolutely right. But, when you talk about momentum, I think a lot of people held out for a good 2019 at last quarter. And that was taken away, David. The upside, optionality in, upside out.
Right. And Tusa would argue if this is really not a 2020 story, but a 2021 story, he's tired of what he calls the cut numbers, reiterate buy approach, which he says is endemic to the sell side.
Well, he's right. I mean,
that's what B of A does. I mean, they cut their target to 12, but
yeah, I mean, take it down to 6 and then get this thing rolling. Tusa was great yesterday, David. Tusa was on his game. Tusa, Matt Boss. I mean, we're seeing some stuff at J.P. Morgan that really is exceptional research. Exceptional.
Yeah, it's worth mentioning because, no offense, but there is a lack of rigor in a lot of research that's out there. You and I both lived through the days, of course, in the late 90s and the early aughts where, analysts were all bought and paid for by investment banking, and those that didn't toe the line were sent packing. That's not the case any longer, but it is still difficult to find analysts who truly dig into the numbers in a real way and are willing to stick to their thesis, Jim. And we understand the pressures on them. It's not about banking anymore necessarily, but you still can get cut off by companies. You still can be influenced by shareholders. There's a lot of different cross currents. Not to mention, it doesn't pay nearly as well as it used to. So some of your best and brightest moved on to other professions or other parts of the financial services profession.
Well, I mean, there are people who feel, David, that Tesla does a lot of private talking. There was a moment, remember, Tusa's also a reporter. And if you remember, David, he was talking about the H-frame and the problems. And at the time, people didn't think anything of it. Boy, they came up. They came up. His reporting. Yeah. I mean, Matthew Boss does satellite reporting. Tusa does reporting. They've supplanted journalism, David, because they've also the web wiped out journalism.
There is a high.
Well, we're still giving it a shot
component
here. Yeah, still giving it a shot, Jim.
No, I know. David, you're a Triceratops. You're teamed with a Stegosaurus. And because Carl can pivot and do a little popular culture. He's actually present. He's in the present.
True.
We are paleo.
But I don't wear a tie. So, I mean, you know,